Well, good morning, everyone. My name is James Trainor, and I'm a partner in BDO's tax practice. And I'd like to welcome you to our Working in Australia webinar series. And as we move through to the end of the FBT year at 31 March, it's time to talk about FBT, Fringe Benefits Tax Compliance. Now, before we get started, I'd like to begin by acknowledging the traditional owners of the land on which we meet today. And here in Sydney, it's the Gadigal people of the Eora Nation. And I'd like to pay my respects to elders past and present, and extend that respect to Aboriginal and Torres Strait Islander people who are joining us today. Before I introduce you to our fantastic speakers, let me just touch on a couple of our housekeeping issues. So firstly, if you have any questions, we'd really welcome them. We've had some already as part of the registration process, and we'll answer those either during the session or at the end of the session. But if you do have some questions as the session goes on today, please add them in. There's a spot you can put them in on the side tab there, and we'll try and get to as many of the questions as possible. As you can appreciate, though, we are a little bit pressed for time, so if there's stuff that we can't answer, then we'll look to come back to you at the end of the session. If you've got any technical difficulties, again, there is support that's available through the tab there, so click onto there. Hopefully we're all pretty familiar with this sort of technology and everything goes smoothly for you, fingers crossed. At the end of the session as well, we'll follow up with an email, and that'll contain the presentation slides. It'll be a link to the recorded session, and it'll also provide you with information about some upcoming webinars that we have in this series, and also our contact details. So with you today are a range of people with really deep expertise in FBT. We'll start with Jennifer Madigan, and Jennifer's a director of FBT and employer obligations with the Australian Taxation Office, and she'll give us some wonderful insights into what the ATO is looking at in terms of compliance. And we're really thrilled to have Jennifer join us today, and we're grateful for the time and effort that she's put into that. We'll also be joined by Ben Watkinson, who's a director in the tax group here in Sydney with me, and Judy White, who's an executive director in our tax group in Brisbane. So there's a range of different topics that we'll cover as we go through the session. So without further ado, I'd like to hand over to Jennifer, who will talk to us about the ATO's approach to FBT compliance. So over to you, Jennifer.
Thank you, James. And I will just double check that you can hear me.
Hear you fine, Jennifer.
Excellent. Thank you, James. And look, thank you for having me along today to talk about this year's ATO compliance update in regards to FBT. It's just going to skip to the next slide for me. So today I'm going to talk about some of the ATO's focus areas in regards to FBT, some of the specific things that attract our attention. I'm also going to run through some FBT compliance examples, and these examples cover the common mistakes we see employers make and go through what the outcomes of those mistakes can be. So just being able to share some of that with you so you can avoid making those mistakes yourself. And finally, I will, at the end, direct you to where you can find additional information and resources. So look, let's make a start by taking a look at the ATO's focus areas. It's just going to go back one slide for me for a second. Sorry. Yeah, excellent, thank you. So before we get into the detail, I just want to say, just like other employer obligations, like super guarantee, pay-as-you-go withholding, single touch payroll, our approach to reducing FBT non-compliance consists of helping employers and their representatives to get it right through our help and assist communication and guidance activities. And then secondly, correcting those employers who don't get it right through our compliance activities. So I'll get you to move on to the next screen for me now, and we can take a closer look at some of the detail of what we're doing and what we're focused on. So we do continue to see employers who are having difficulty understanding the FBT law, given there are different rules around valuing and calculating FBT, depending on the different benefits they're providing. There's also different concessions or exemptions that are available and different types of records that an employer needs to keep depending on the types of benefits they're providing. Now, that's why we have continue to have a really strong focus on how we can provide employers with the information they need to get their FBT right. And we certainly appreciate the efforts of professional bodies like yourselves here today in helping to spread these messages. So this year we've been more active than ever in communicating about FBT. With tax time practically upon us, you'll no doubt have started to see more communications coming out from us, reminding employers that the end of FBT year is coming up and what they need to do to prepare. But throughout the year, we've also been busy busting some common FBT myths, like the one that dual cab utes don't attract FBT. So this particular topic attracted quite a bit of attention and discussion throughout the community about a month or so before Christmas last year. So you'll see on the screen there, I've popped up PCG 2018/3. Now this one's really important for those employers who might be providing dual cab utes for private use or any type of vehicle really. It outlines our approach to determining private use and what we consider minor, infrequent and irregular. So that's one to look out for and make sure you're across if you are providing car fringe benefits. We've also been running a campaign called Get to Know Your FBT. And this particular campaign has been designed to help small business employers. So given the competitive labour market, we became aware that employers were increasingly offering benefits as a way to attract and retain staff during this shortage of labour. And some of those employers were offering fringe benefits for the very first time without fully understanding what their obligations are to the ATO and without thinking about whether it could even attract a fringe benefit tax ramification for providing those types of benefits to staff, like car parking, gym memberships, footy tickets, and personal use of a work vehicle. So this campaign has really been designed to increase general awareness amongst small business employers and drive them to or direct them to one of our websites, which you'll see on the screen in the bottom corner there, ato.gov.au/how-FBT works. So this particular site provides a wealth of information around FBT, including a link out to our comprehensive FBT guide for employers. So although FBT is quite intricate, it's quite difficult to understand, there is a lot of resources there for employers to get that general awareness and understand what it is that they need to do. So that's our help and assist, communication, marketing side of things. When it comes to compliance, again, you may have actually also recently, a few weeks ago, heard some media coverage about the ATO undertaking random inquiry reviews of employer obligations. And that does include fringe benefit tax as one of those obligations. So we're undertaking both random and risk-based reviews of all employer obligations, including FBT. So while we know that most employers do try to do the right thing, there are those who don't comply. And this increased compliance focus for FBT and more broadly the other employer obligations is to ensure employees receive the entitlements due to them and also to make sure employers don't have an unfair advantage over those who do meet their obligations. In addition to undertaking reviews and audits, this year we're increasingly nudging employers, for want of a better word, via a letter, email or even a phone call, asking them to check their FBT obligations and lodge returns if they do have an FBT liability. And we are finding some employers do take this opportunity to review their information and make the necessary corrections or lodge an FBT return without any further need for a review or an audit. However, there are some employers who don't respond or inform us that they don't have an obligation. And once we review their records, we can see they have in fact provided fringe benefit and may end up with a tax liability that they weren't expecting. So on that note, let's actually move to the next slide and take a look at the types of things that attract our attention. So before I go into detail, the ATO does use third-party information and our data analytics to identify employers who appear to be not meeting their FBT obligations. And we do use that data to identify employers to undertake targeted risk-based compliance action in the form of a review, an audit, or a nudge to make sure they are meeting their FBT obligations. So things that attract our attention include not only those who are deliberately not meeting their obligations, but also employers making common accounting errors or mistakes, or those that don't fully understand what their FBT obligations are. So I really encourage and remind employers to ensure they do use the resources available to them and take steps to understand their obligations and put in place those appropriate payroll governance processes to avoid an unexpected FBT liability in the future. So if we move to the next slide, and we'll take a look at some of the detail about what attracts our attention. Our biggest concern is those employers who provide benefits but don't keep the appropriate records to confirm their calculations or their FBT position, as well as employers who don't lodge and or pay when they should. And sorry, I'll just get you to go back one slide for me. Thank you, Tar. So we often see employers as they're providing these benefits without understanding what the impact is for either themselves as an employer or also for their employees. And that's one of the number one messages we would want to share with employers, is to really think about, before you start providing the benefit, think about and really understand what it means for you as an employer with your obligations with the ATO, as well as what it means for your employee receiving the benefit. So on screen there, you'll see 4 areas which attract our attention. So car fringe benefits firstly, or motor vehicles, sorry. This remains the most common area where we see mistakes are made, and also it is one of the most common fringe benefits that we see employers provide. So some of the things where we see employers making mistakes or challenges are around classifying vehicles, also determining whether the vehicle is exempt or not for the purposes of car fringe benefits, or treating all eligible commercial vehicles as FBT exempt without considering that private versus business use of the vehicle. Logbooks is another thing. So we see logbooks just either not being kept at all, or they aren't valid, or they don't include a representative sample of the actual travel undertaken. And finally, just back on private versus businesses, we also see employers providing their employees with private use of the vehicle, but treating them as 100% business use in their FBT claims. In terms of employee contributions, this is another area where we see some common mistakes being made. We see employers just not reporting the amount of employee contributions at all, or reporting the amounts at the wrong label. And I really want to highlight this one because during a recent compliance exercise, around 5% of the employers we contacted advised that they had employee contributions, but that they had reported these amounts under a different label. So what this means is we've had to unnecessarily contact an employer to verify information or incorrectly undertake an audit. So make sure employers report their employee contributions at the right label, that they report them accurately, and that they are consistent with other returns you are completing. So this also goes for reportable fringe benefit amounts. We see employers include these amounts on an employee's income statement, but they don't lodge an FBT return, or vice versa. We see them lodge an FBT return, but they don't include the amounts in the employee's income statement. And finally, with RFBA, I do just want to highlight, if you have employees whose salary sacrifice super contributions, and those contributions are made under an effective salary sacrifice arrangement and paid to a complying super fund, those amounts don't need to be included as a reportable fringe benefit amount. So we see that mistake pretty frequently too, with employers incorrectly including that amount in the RFBA amount. So our final area there is employers who have a a corporate group. Now, what we see happen here is those employers within that corporate group not lodging separate FBT returns. So they lodge one return for all of the employers within that group. Now, this is incorrect, and it leads to a mismatch of data, which might trigger us contacting employers again without that being warranted. So each employer entity within a consolidated group does need to lodge their own FBT return. So you'll see there down the bottom of that screen the key things to remember. When it comes to FBT, take the time to identify the types of fringe benefits that you're providing to your employees. Take the time to understand and calculate the taxable value and the amount of FBT. And then once you've done that, lodge your FBT return and report each employee's reportable fringe benefit amount, and keep the relevant records to demonstrate all those calculations that you've made and how you've arrived at that position. So let's have a look at some compliance examples. And I will get you to skip over to the next slide for me. And these three examples really are just reflective of the common mistakes that we see employers make. This first example, headed there, prompt action can avoid penalties. This is the first tip I can give you, is to really contact us as soon as you realise you've made an error. Or if we've written to you and asked you for information or asked you to take action by a certain date, please take that action by the date. Or if you need more time, please give us a call and ask for an additional time. The important thing is to keep in contact with us, and this may reduce or even completely avoid penalties being incurred, or charged, I should say, to employers. So that's what this first scenario is about. In this scenario, we had an employer who owned several vehicles valued at close to $750,000, but they hadn't lodged FBT returns and they hadn't reported any employee contributions. We wrote to this employer and we gave them 28 days to review their FBT records, and the employer actually self-corrected by lodging an FBT return before the due date. And because of that, there were no penalties imposed on this employer's mistake, and because of the prompt action that they took in response to us contacting them. So really key, keep in contact with us and contact us as soon as you realise you've made a mistake. If we can move on to the next example now, and I probably can't say this enough, but record keeping is critical when it comes to providing fringe benefits. Make sure you understand what records you need to keep. There are some really very specific requirements to be on top of with respect to FBT, with different documentation, records and declarations being required for each of the different types of fringe benefits. As for most taxes, employers must keep records that will allow them to be able to assess their FBT liability, but there are some additional things that you need to be across the FBT. So records need to show things like the notional value of each fringe benefit. That's the value before any grossed up factor is applied, as well as how it has been allocated between employees. If a benefit is exempt or a concession applies to reduce the amount of FBT, employers still need to keep records which support how they've worked this out. And some of these examples of records are calculations or worksheets used to work out the FBT liability, might be invoices, receipts, travel diaries if you've got travel as a fringe benefit, logbooks and odometer records when it comes to motor vehicles, and in some cases, employee declarations. So one of the questions we often get is, what will I be asked for if the ATO contacts me? Well, there's some of these examples, but it really does depend on the benefit you're providing. That's why it's really important that you understand and do your research to understand what are the types of things that need to be kept in terms of records. So as I said, making sure you understand those extra documents and calculations that you need to hang on to and provide for the types of benefits that you're providing. And if you have certain FBT exemptions and concessions, in some cases you may also need to obtain records from your employees. Now, let me come back to this particular scenario that we've got on the screen though. This employer had several cars and the employer, again, hadn't lodged FBT returns. When we asked the employer for evidence to support their claim that they'd had 15% private use and that the amounts had been offset by employee contributions, the employer couldn't provide any records to substantiate those claims. So there weren't any logbooks, there were no odometer readings, there wasn't a record of employees making those contributions. They were unable to provide anything that supported what they were claiming. As I said, the logbooks were invalid, so they didn't include all the detail that was required. And as a result of this, we used a statutory method to calculate the amount of FBT liability that they were owing, which came out to $450,000. In addition, a 50% penalty of $220,000 was also imposed on this particular example. So record keeping, really important, and making sure that you understand what those requirements are before you start providing the benefit, and making sure you've got those processes in place to capture those records and store those records for you. If we can move on to the final example now, and again, another scenario involving motor vehicles, but in this one, the employer claims the Volkswagen van was a commercial vehicle and exempt from FBT. In addition, initially the employer didn't supply any records, but when they did, the logbook they provided was invalid. It didn't include the details of private use. It didn't include, it didn't match with odometer readings. And in addition to that, we found that the Volkswagen was designed to principally carry passengers and was not an exempt vehicle. And again, that's that common misconception among employers that certain motor vehicles are exempt from FBT. Cars, utes and vans with a load carrying capacity under a tonne, where the principal purpose is not for carrying passengers, may fall within FBT exemption, but only where the private use meets certain criteria. So again, that goes back to that PCG 2018/3 that I mentioned a little while ago. So we typically see this is where employers are seeking to claim FBT exemption for dual cab use. So watch out for that one. But getting back to this particular example, again, we used the statutory method to calculate an FBT liability. We issued default FBT assessments, which came to $100,000 over 2 years, and also imposed a 75% penalty of around $75,000. So one motor vehicle treated incorrectly and not keeping records, not providing those records, etc., and it leads to quite a big tax liability and in this situation a penalty as well. So what these last three examples demonstrate is where we identify employers who don't appear to have met their FBT obligations, we will initially work with them and their agents to review and help correct their mistakes and improve their understanding of their FBT obligations. However, where employers intentionally don't meet their obligations and fail to cooperate, we will take stronger action to discourage this behaviour, and that can include amending returns, default assessments, and charging penalties as well. So where can you find more information? I can just get to probably the next slide actually for me. Up on the screen there, firstly, you'll see our key dates for lodgement of returns. They're due on the 21st of May this year. Tax agents have until the 25th of June to lodge. Another thing just to point out and highlight, if an employer is registered for FBT, but they don't have an FBT liability this year and they don't need to lodge an FBT return, please remind them to lodge a notice of non-lodgement benefit tax, and that you can see the NAT number on the screen there, 3094, but you can also find that easily on ato.gov.au. It's really important to do this because that way we then know not to expect a return from a particular employer, so we're less likely to be sending letters to remind them to lodge or following them up for lodgement that just isn't coming. We can move to that last slide there, and this is where you can find further information. As I said at the beginning, we've got a comprehensive suite of information there on our website, ato.gov.au/FBT. We've also got some videos on ATO TV, and you'll see a link there to our webpage about electric cars or electric vehicles, which is a very popular topic as well at the moment. So you may have heard, or you probably have heard, last month we released another Practical Compliance Guideline 2024/2, and this introduces our approach to what's called the electric vehicle home charging rate. We're just still in the process of updating our web content, but you can find that PCG by going to ato.gov.au and in the legal database. You'll see at the top of the screen there. Alternative records is another item that you'll see more coming out about in the coming weeks. There are 11 legislative instruments that will be published before the end of the FBT year to help employers understand whether this applies to them or whether they can take advantage of these alternative record keeping measures. But you've got a link there as well. You can find that on the legislation.gov.au page for Treasury law amendments. And finally, on the right-hand side there, LinkedIn is a great spot to find the latest and hear all the latest in terms of not just FBT, but in employer obligations in general. Our Deputy Commissioner Emma Rosenzweig there on the left and our Assistant Commissioner Peter Lonergan on the right are both very active in terms of sharing messages and the latest news, including fringe benefit tax and what you may need to know to help you or help your employer clients in meeting their FBT obligations. And with that, that brings me to the end, and I will hand back to James.
Thanks, Jennifer. It's actually me, but anyway, I'm doing my best to look like James. But thanks, Jennifer, for your insight and valuable presentation. I know everyone really appreciates your time and comments in what the ATO is focusing on and what they need to do and what employees need to do to remain in compliance. So look, I'm just going to touch briefly on a couple of FBT updates, and Judy will pick up a couple as well. Thankfully, there hasn't been too much in the way of updates in the last 12 months from an FBT perspective, but there are a few things that we'd just like to highlight. So the first one of those is in respect of electric vehicles, as Jennifer touched on. Practical Compliance Guideline 2024/2 has now been finalised, and that provides the safe harbour 4.2 per kilometre that can be used for calculating electric charging costs of vehicles at home charging stations. And that's effective from 1 April 2022 for FBT purposes and 1 July 2022 for income tax purposes. So a couple of changes. Obviously, there was a draft PCG released last year, and a couple of changes from that in terms of the finalisation was, firstly, there's an extension of the transitional rules where odometer readings have not been kept to include the commencement of this current year. And now that actually provides the ability for a combination of the cents per kilometre method and actual external costs to be used where it is actually possible to split out where you've used an external charging station and you have sufficient information to do that. So they're the couple of key changes from the earlier PCG. So what does this effectively mean for us? I know a lot of people are probably thinking, well, you know, electric vehicles are exempt from FBT, so you know, why does this matter? And I think the key sort of message is, as we've touched on earlier and previously, is, well, whilst electric vehicles are exempt from FBT, employers do have an obligation to report the taxable value for a reportable fringe benefits purposes and include that on earnings statements. And so, you know, given the high base value that electric vehicles are likely to have, you know, the statutory formula at 20% of the base value, you know, does create, you know, quite a significant RFPA figure where that's used. So employers may wish to look at using the operating cost method to determining the appropriate taxable value and calculating the reportable. Obviously, a key you know, component of operating costs are the running costs of a vehicle, which includes fuel normally. Obviously, an electric vehicle, you know, doesn't actually have petrol like a normal vehicle. So obviously, calculating the electricity, you know, is a key component of that operating cost. And it's particularly problematic where individuals may charge at home and, you know, use their home charging station, you know, for a variety of reasons, not just their you know, to charge their EV, but the rest of their appliances, etc., that they have at home. So this safe harbour method, you know, provides a practical way of employers calculating the appropriate electricity costs where individuals charge at home, and that flowing into the operating cost method where they wish to use that for reportable fringe benefits purposes. Couple of other key points to note there on the PCG and electric vehicles. This method obviously doesn't apply to plug-in hybrids, so it's only vehicles that are solely fueled by electric power. So plug-in hybrids, electric motorcycles, electric scooters, etc., fall outside of the PCG. But yeah, effectively, as we've mentioned, this guidance should assist employers, you know, with their reportable fringe benefit tax calculations, or indeed individuals who, you know, don't have a car fringe benefit, and, you know, maybe where they have their own electric vehicle that they use for work-related purposes, and they're claiming, you know, individual car expenses in their return. That provides some guidance and assistance to them in determining the appropriate method of calculating that from an income tax perspective. We go to the next slide. So just a couple of other updates and issues in respect of FBT 2024. So whilst not specifically an FBT issue, an interesting thing to call out is obviously the revised stage 3 tax cuts have passed Parliament now and will commence from 1 July 2024. So particularly for rebatable employers, a key message coming out of this is employers may actually now not be better off salary packaging fully taxed benefits. So if you're a rebatable employer, actually, you know, a number of employees may take up the concession that applies where you can package up to 30,000 grossed up taxable value of benefits to account for the benefit of the FBT rebate. But due to obviously the change in the marginal tax rates and noting that FBT is charged at the top marginal tax rate, there may be circumstances where these particular individuals, as a result of the changing bands and the stage 3 tax cuts, are actually not, that doesn't make sense for them to continue to package those particular benefits. So I guess just to call out there, the key message is obviously, communication with employees, and just be mindful, obviously, of the impact of those tax cut changes and the impact on particular individual salary packaging arrangements. Other ATO announcements and issues that are relevant for this particular year, I think, as Jennifer touched on, obviously the ATO, in terms of their compliance program, use a lot of information from third parties, data analytics, etc. So they're obviously, the ATO have made a recent announcement concerning novated leases and salary packaging providers. So there will obviously be increasing sharing of information between the salary packaging providers and the ATO in respect of individuals that have novated lease type arrangements, with obviously the idea there to link in with individuals that are incorrectly claiming personal tax deductions in their own tax return where they have a novated lease. So whilst not specifically an FBT issue, obviously something to be aware of, where individuals who do have a novated lease shouldn't be claiming car expenses in their personal tax return, and this increasing flow of information between the salary packaging providers and the ATO is obviously designed to highlight issues in that particular space. The last thing that I just wanted to touch on briefly, although not a new development, continues to be a very relevant issue from an FBT perspective. Obviously, last year was the first year that we had taxation ruling 2001-2 for an FBT perspective in respect of car parking, which was released following the Qantas and Virgin Blue cases, and effectively, changed the definition of what is considered a commercial car park. That continues to have application. So I guess this is an area that employers need to be on top of, particularly in the hybrid, I guess, workforce. Record keeping, as we've touched on, in respect of car parking is key. It may be that as people still don't work 100% of the time from the office, keeping appropriate records of how many times, days people are in parking, etc., can actually reduce the FBT liability in respect of car parking. So again, a call out to record keeping, being on top of that, and just I guess being aware of the ruling and picking up those locations where a commercial car parking liability may now exist as a result of a change in the ruling that was released last year. So they were the main things that I wanted to cover. So we'll go to the next slide, which I think is Judy, who's going to cover Bechtel and some record keeping concessions.
Great. Thanks very much for that, Ben. Good morning. So thank you, Ben, for taking us through those important updates and issues. That was great. I just want to also quickly say thank you to Jennifer. Thanks for taking the time to share that information and guidance. I'll now discuss a significant case that arose last year, and this is in respect of travel expenses for FIFO workers, and then I'll touch briefly on the record keeping concession starting next month. So the Bechtel case, this was a significant case. So we've just got the citation there, the case citation up there for you. And Bechtel had operations basically with construction projects, and incurred travel expenses for their fly-in, fly-out employees to travel from their home airports to a project site on Curtis Island, located near Gladstone in Queensland. Now, the issue in this case was whether those travel expenses were considered otherwise deductible. Bechtel argued that the travel expenses were otherwise deductible for fringe benefits tax purposes on the basis that if the employees had incurred the travel expenses themselves, they would have received a tax deduction. So just noting there, that is known as the otherwise deductible rules, particularly in our land here. Jennifer, James, Ben and I, we refer to as the ODR rule. So this is just to note that where the travel expenses are considered otherwise deductible, there would be no resultant FBT liability, and so none in this case for Bechtel, if that was indeed the decision. Just two other points on this slide I just wanted to particularly cover in terms of background facts. Firstly is this issue around a travel allowance. Now there was a allowance in this case, it was called a project allowance. And that was ultimately determined, however, to be in recognition of the inconvenience of working on Curtis Island rather than being paid for their travel. And the second important item I wanted to really point out here is the rostered on location. So the employees were only considered to be rostered on when they arrived at the project site. So you're all probably hanging in there to know the decision in this case. And for those of you who aren't familiar, or just James, if I could go to the next slide, please. I just wanted to cover the court decision, and it included some of these particular items here I wanted to focus on. Now, firstly, we couldn't talk about travel, certainly in the last, oh gosh, it's probably been a few years now, but in the last little while, shall we say, without mentioning the John Holland case. So this case has become an authority and certainly was the case in this area that did put the focus on the deductibility of travel expenses. And so this case did have similar circumstances to Bechtel. And that is why it was in particular as well considered. And two particular points as well I'd like to zone in on for the principals in that case was the point of hire, the transit point, and also whether the employees were considered under the direction and control of the employer during the travel. Now, what ended up happening in the Bechtel case is that the court distinguished the authority of the John Holland case, mainly as none of Bechtel's employees were rostered on to duty as soon as they arrived at their home airport or their point of origin airport. Instead, they were rostered on when they arrived at the project site. The travel between the point of origin airport and Curtis Island was not considered travel between two places of employment. As such, the expenditure on the travel was a prerequisite to the earning of the employee's income. What does all this mean? Okay, so this was effectively considered as private home to work travel. This means that it was not tax deductible, so not otherwise deductible, and the court did hold in this case that FBT applied, noting in the John Holland case it was determined that it was otherwise deductible in those circumstances. Unfortunately for Bechtel, in their circumstances, it was held that FBT did apply and it wasn't otherwise deductible. So just moving, thank you, James. Let's have a moment just to discuss some comments and a bit of an analysis of that situation and impact on employers. What do employers need to think about? The first point I really wanted to point out, and I got lots of lovely calls and reaching out from clients and contacts after this case came down, and I found that in a lot of those clients and contact situation, it was the area involved was in fact a remote area. So just wanted to point out that in the Bechtel case, and some of you who may be familiar, I'm from Brisbane, so it's a bit easier for me, but Curtis Island is out from Gladstone. Gladstone is considered to be an eligible urban centre, and all of that means that for tax purposes, Curtis Island was not remote. So if you have a scenario where your situation, the location is a remote area for tax purposes, then there is an FBT exemption available in the legislation that may apply to those circumstances. Since Bechtel was not in a remote area for tax purposes, the FBT exemption was therefore not available, and that means that instead the otherwise deductible rule was relied on to reduce down the FBT by Bechtel, and became the point of this case. So that's just one particular area I wanted to point out. So in case this case may not actually have application if the location involved is actually in a remote area instead. The second sort of dot point on that slide that I wanted to cover is just if we think about in this case that it's tended to also centre on that transit point, that point of hire, and it determined that it was at the project site and wasn't back at the home airport. So for example, a FIFO worker, say, lives in Brisbane, like where I am here, in Queensland, and then travels to Curtis Island. So their home airport is Brisbane. So being actually rostered on from Brisbane versus being rostered on from the project site at Curtis Island. So in this case, as I mentioned, it was determined that the facts determined that they were actually rostered on at Curtis Island. In the John Holland case, they were actually found to be rostered on at that home airport. So the question then becomes the travel, whether that's deductible or not. So what I wanted to emphasise was that you might then think, okay, well, a way to resolve this is to roster on our FIFO workers from their home airport, and that will increase our chances of an argument towards the travel being otherwise deductible for FBT purposes. And that's great. Just noting though that if the travel time was not already compensated, so those employers in that case, you need to just have a quick consideration of the fact that to roster someone on means paying their wages, and possibly on costs and further costs that the employer would need to enter into to in fact roster them on at, say, an earlier point, such as their home airport. So just that sort of practical, that commercial sort of side for a moment to consider, and it might even come down to working out what those costs might be, and then working out what the otherwise FBT cost may have been, and having a look at that. So that's just another sort of way of looking at this case and how you apply it to other circumstances. Next point on the slide there is we're actually a little bit uncertain at the moment, so please bear in mind that there is an appeal to the full federal court. It's actually been heard However, it hasn't been released yet. So you might go away from this presentation and then in the near future hear about the appeal, and it could change the outcome. So if you wouldn't mind just bearing that in mind, that it is subject to appeal at the moment. So last points on the Bechtel case, employers to be aware of the risk that FBT can apply in similar circumstances, in particular, 3 particular points. So the project site is located in a non-remote area. The employees are not specifically paid for travel from a transit point to the project site, and the employees are not formally rostered on for the duration of travel. So if those particular circumstances are present, please be aware that there is a risk that FBT can apply for the current decision in the Bechtel case. And I just wanted to briefly also talk about the record keeping concessions. And this was already touched on kindly by Jennifer in her presentation, but we do have a slide, but I think it's just not being helpful at the moment, so that will be in your slide packs anyway when they come through. But all we wanted to say was that from 1 April, so next month, can you believe it, how time flies, there are some new record keeping concessions that can be applicable. So it is for the next FBT year, not for the 2024 FBT year. These are currently in draft as well, but there as I mentioned, Jennifer did also touch on this, which was great. So there is possibly some more contemporaneous record keeping, business record keeping, that might be able to be utilised instead of attending to declarations in the 25 FBT year onwards. Just noting that they still tend to require the same type of information that is in the declarations. However, it may present an opportunity to have that information incorporated in business records that are kept as you go, that might actually be a helpful record keeping concession in future. So that is all from me on Bechtel and record keeping. I'll now hand back to James. Thanks.
Thanks very much, Judy, and apologise for that missing slide. It's run off somewhere, but I'm glad that you covered those requirements. So that brings us to a conclusion of the formal part of the presentation. We did have some questions that were raised both before the session as well as during the session. And I think one of the things before I get to that that's really important to note is that one of the comments that Jennifer made is that there is a lot of information that's available to employers around FBT, and that's really important. And this is something the ATO has really focused on, particularly over recent years, with releases of information about the tax gap. So this information is provided annually, and it's comparing what the ATO thinks should be the amount of FBT that's raised and what was actually raised from employers during the year. And although FBT in raw terms is not a big number by comparison, it's $1.2 billion. That's I'd have that, but anyhow, in terms of overall tax take, it's not a big number, but it represents about a 28% gap. And so, look, it is something that Jennifer definitely touched on in terms of perhaps whether it's a lack of awareness around FBT, employers only touching it once per year. And so that information that's available there is just invaluable, and we're really grateful for both Jennifer's time today to explain that, as well as for the work that her team has done in creating a lot of information that's available for employers to go on and help them ensure that they comply with those obligations. So definitely take advantage of that when it's there. We don't have a huge amount of time, but just a couple of questions that sort of popped up during the session. Ben, one for you. This was in relation to questions about electric vehicles and about charging infrastructure. So employers have charging infrastructure at their business premises. What's the FBT implications for that?
Thanks, James, and that's a really good question. So I think, a number of employers, obviously, as the uptake on EVs and become greater in the community, are actually providing, charging facilities at their workplace. So the ATO guidance on that, the ATO fact sheet in respect of electric vehicles confirms that, where the employer does provide a charging station at their place of employment, that's obviously a capital, asset of the business. So, that's not a separate benefit. And then, where employees actually do charge their vehicle for that at that charging station at the place of work, provided that charging obviously takes place, on a working day, then the property consumed on premises exemption should have application to exempt that from FBT.
Excellent, thank you. Yet again, one of the other little nuances or quirks around electric vehicles that we're all learning to deal with that we didn't have to touch on in years gone by. There were a couple of questions that I just might pick up that were sort of raised. One was in relation to meal entertainment and whether there is a threshold at which the number of times you can provide meal entertainment to an employee and still fall under the minor and infrequent exemption. And look, the answer is that there's actually no bright line test. So, minor and infrequent exemption looks at a range of different things. Obviously, there's a value element being less than $300. And then when we look at the frequency, then the legislation nor the ATO guidance doesn't set a particular number. So you need to have a look at the reasons, why that benefit might be provided. Is it something, for example, that's, every month there's a scheduled lunch on and it's easy to identify who went there? That's not suggesting that it's infrequent, but perhaps the ad hoc thing where someone gets invited out to a birthday function or something like that, you have a Christmas party and maybe those add up to average once per month, then then maybe in that circumstance the minor and frequent sort of can apply. So unfortunately there's no set number of events that can apply to, so you do need to think about it a little bit more holistically, but certainly once per month is probably something that I would say is erring on the infrequent side, but you just need to have a look at it more broadly.
And if I could just jump in there very quickly too, James, because that's such a great question that you centered on there, and we get that over and over and over. So if you're sitting there as well, everyone, with that question, absolutely. And the only other thing I can add to that is, as James kindly mentioned, with guidance, taxation ruling 2007/12 is one that provides some examples, as James touched on there with the guidance, and it might give you a little bit more information. And if anything, it might actually show you too about how we can't give a number. As accountants as well, we love giving numbers and we'd love to, but there is, as James said, lots of facts and circumstances to take into account.
Thanks very much, Judy. Well, there were a few other questions, but we're just running out of time, so we'll look to get back to those individuals who raised those questions with us, and we thank you for them. Once again, I'd just like to thank the time and effort that Ben, Judy, and Jennifer went to think about what it is that's interesting and relevant for FBT, and to pull the materials together and bring their expertise to the table today. So thank you very much for your efforts. We really appreciate that. A little bit of an advertisement, a little bit of a plug for our next series. So the next Working in Australia webinar will be payday super development. So fingers crossed we get a little bit more information out of the budget around payday super, and Judy and I will be talking about that. And for those eagle-eyed people that picked up on the dates, that's happening on the 21st of May, which is of course the day that employers should be lodging their FBT returns when they're not using a tax agent. So well done for you who followed along there. There's a link there if you want to go on and register for that particular series or that particular webinar. And we also have some, the next one after that will be touching on year-end obligations, which will be happening on the 10th of July. So once again, you can go on and register for that. Of course, with all of these sessions, if you can't actually attend on the day, we do have, they are recorded, and we do have materials that will find its way to you afterwards. So we'd love to have you register and attend for those. So finally, thank you everyone for joining us today. I hope that the rest of your day runs smoothly, and all the best. Thank you very much.
Thank you.